at 0% inflation adjusted on interest rates right now. I mean, it's hardly tightening from the standpoint of,
the bond market, not the Fed.
Yeah.
The Fed's tightening, but to your point, bond yields, inflation about the same level.
If you're a fundamentally driven firm like ours is, you're actually excited about a time like this because capital is going to go where it's going to be treated the best, not because interest rates are zero and just fly into passive strategies. I think it is going to be harder, but if you're a stock picker, that should be the place that you do.
Where do you think capital will feel like it's treated the best right now, Dan?
It already seems to be rotating into the more value-y sectors of the market. That's got to get you into the banks. Those are starting to trade better. Industrials look pretty good to us as well. Those are starting to trend higher. And there are pockets of tech that are looking very attractive. You look at the semiconductor space, it's probably a touch on the early side right now, but these stocks are down huge. And
the SMH, the SOX, and they've been just whacked.
Terribly. But, you're getting to a point now where, fairly soon, within the next couple of months, you'll see the revenue cuts start to slow down, and that'll probably be a sign to get back into the
Do you think in a year the U.S. economy will be entering recession?
No way. I don't think so.
There's a lot more calls out there for 2020 recession. Now, 2020, it's hard to believe, is only a little over a year away.
It depends where you think we are in the cycle. I would argue that we were very slow coming out of the financial crisis. So slow that what sort of we're only getting into a normalized recovery within the last 24 months. So it depends on where you think you are. By normal standards, those would say we're longer in the cycle, but I'd argue that you're more mid-cycle now rather than in the latter innings right now.
I know we're not. I feel like politics has turned into the British soccer season. It's like the day it ends, the next day it begins. So we're not even done with some of these gubernatorial races we just told you about.
Yep.
And you believe that the president will have to soon enter re-election mode, which means promises of a lot of things. It's not a political question. It's a market question. What will that do to equities potentially?
Yeah, so I wrote a note on this, which is on our website at palisadecapital.com. The president has started his re-election. He's not about to start. He started it the first, the polls closed. And he's going to do everything he can to keep the economy growing. There are narrow windows where he can work with his Democratic colleagues. And I do think that next on the docket's got to be trade. I thought it was interesting what CNBC reported on Friday about Wilbur Ross possibly stepping down by year's end.
Yeah.
I think that Trump's in the process of reassembling his team to get a trade deal done with China, not necessarily, because that's within the range of what he can do.
How big would that be? We got a tease of this last week. That's kind of a fake floater or whatever.
Yeah.
What if we get a real deal? Hey, we got a deal in principle, trade deal.
I think it's significant. It helps China. It helps the U.S.
I mean, for the U.S. equity markets, you think it's...
I think it's massive because that's going to create more long-range confidence on the part of capital allocators, i.e. corporations, to spend on capital investment.